What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our trending tickers for the day. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First one up on the chopping block today is going to be GME for none other than our Gamestop Corporation, infamous stock here. So what do we have going on from the daily perspective? We're going to come in and give ourselves that daily roadmap, so pointing out the most obvious areas of support and resistance, and that's what we've got on the chart, right? You can clearly see this sort of range, lows and highs, midpoint, also offering some resistance, then support, then resistance once again for that lower high, break into the lows, and obviously we've closed weak at the lows of today's session and underneath the prior swing lows. So nothing about this chart right now is looking bullish. However, we have to caveat that with, okay, we've been down a number of days aggressively here. If we start to get a dead cat bounce, that's fine. It doesn't really change the trend, obviously, unless we were to recapture this level, put in a higher low, and then do something like that for a reversal. As of right now, the chart would certainly not suggest that, right? Be aware also, especially options trader, that earnings are around the corner on this one. I believe they're after the bell on Thursday. Yeah, the 17th after, roughly 4 p.m. Central Time. So that's what we've got from the daily perspective. Again, everything about this is screaming bearish, breaking down out of this daily range. Even if we get back tests here, look for H patterns to develop, basically a break and retest at this level. Any reason to get short there if you start to see 30-minute patterns, which we'll discuss in a second. It's your short entries here, stop goes here, your target is the equal low around today's low of day, right? So that's what we've got on the daily. Nothing about it suggesting bullish. If we have to fish for downside targets, what else do we have? We're going to have to go out to a weekly. And to the downside underneath us here, we're looking all the way back at 40, let's just call it 41 even, basically the first low of the major pullback after that massive sort of squeeze. And, when it was very historic, what was going on there, a lot of emotion tied up in this move. Obviously, you have many people who still believe in quote unquote the movement, but I hate to break it to you, it's quickly crumbling, right? You can clearly see over the past little while, we've been in a fairly sustained downtrend. Again, this is a weekly time frame chart, giving us that H pattern and a breakdown on today's session for just trend continuation. So that's what we've got on the longer time frames. On the 30-minute, what else can we learn about the price action here? A little bit of a hold here in the morning session around that 88 even level, the bottom end of the daily range. But was it sustained is, of course, the question. Absolutely not. Closing weak at the lows. Nothing about this would indicate any reversals. Obviously, as I pointed out, if a dead cat bounce does occur, look for back tests of 88 to get short. So look for double tops here on the 30-minute. Break of the neckline takes you back lower. Could just be a simple head and shoulders pattern like this. Break of the neckline takes you back lower. You get the gist, right? Any reason to get short on the back test of 88 does look good for just trend continuation here on the daily after a little bit of a pause. If you're more conservative and you don't want to take the short up here, I would wait for some sort of breakdown of the low and then get continuation from that perspective. So the last thing we'll do here is quickly take out the Fibonacci's from the high of today's session to the low. Anything that occurs underneath 38.2 here, we'll call it 84 even, is the most bearish outcome, looking at bear flag consolidation and then breakdowns for continuation to the downside. Again, if it's going to reverse and be a long-sided trade, I would need, there's no ifs, ands, or buts about it, I would need to see some sort of higher low that would form up and over 88 to have more confidence in fighting this aggressive daily and even weekly downtrend now. So that's GameStop in a nutshell. What else do we have on the trending list here? BABA for Alibaba, and we did remove that from our core list of companies over on the main channel. It's continued to sort of crumble here. So this one is sort of, I hate to say it, but aligned with GameStop in the sense that it's in an aggressive bear trend. It's kind of a garbage stock at this point in time. No one's really interested in trading or investing in it, although the options liquidity is still fine. Regardless, what do we have going on here? You can clearly see it's all about this gap overhead if there's going to be any sort of reversal, but just like in GameStop, nothing about today's activity would indicate a strong reversal coming. For upside activity, we would again want to see some sort of higher low be produced. I would want to see it pull back off the bottom of the gap, and then your trade is for the gap to fill. I would not overstay my welcome. I would look to aggressively exit any call options or shares at this level here, so 3/4 of the position at minimum, and then trail a stop higher to see if we can get continuation. But don't be surprised if it rolls over, takes out your last quarter of the position, and we just continue on our merry way lower on the daily time frame. I mean, you can clearly see that this group of folks here is all overhead supply at this point in time. They're looking for any excuse to get out if they're still holding for either a smaller loss or just sort of cut cut ties with their position, right? So as this moves higher, you're looking for any reason to kind of get short. So again, maybe it does something like this and you look for a gap fill reversal. So any bearish patterns that start to form here, roughly 86.65, are another excuse to get short and then just get trend continuation from the daily time frame. To the downside, what do we have underneath 77.31? 74 is coming from, if we go out to a weekly, and we're going to have to grab multiple years here because Alibaba has not been this low for quite some period of time. You can see the last time we were trading around these levels was back around 2015, 2016. So you can see shelf of support here. If I zoom in on that, again, keep in mind this is a weekly time frame chart, consolidation, then it breaks out, held that support for a while. That's 74. That's where that's coming from. And then underneath that, your double bottom from right around in here is 58. So Alibaba to the downside, there's quite a ways to fall until we start coming into some structure. We know that the trend is clearly down here on the weekly and daily time frames. It's not looking great for reversals, but you have the levels to be paying attention to if there's going to be any sort of trade that develops here. So that's Alibaba. Next up on our list is going to be NIO for NIO. What's going on this one? We're back down on the daily. Good. We already have a little bit of a daily roadmap. There's your overhead little gap, sort of similar to what happened on Apple today. It filled, majority of the gap, but not quite all the way there. What I think we need to talk about on NIO is, in fact, what happened in the morning session. So we put in today's low during the morning session, rebounded resiliently, and tried to fill that gap. And again, to me, this is indicative of a lot of buyers who got excited about these lower prices, but they're not. It's not the group of buyers that you want to be excited about these lower prices, right? This to me would indicate an impulsive buyer instead of the methodical, type of buying that a large fund or institution would do, where they're consistently waiting for uptrends, buying at the VWAP pullback, so on and so forth, getting activity like this. This is just impulsive buying at the lows, right? You get this quick snap to the upside. It's clearly not sustained, and we'd roll over into the afternoon. So I'm not saying that these people are, the most weak-handed in the marketplace, but if we start to get a crack of today's lows, I would imagine many of the people who thought it was long on the morning pullback start to fold, adds to the selling pressure, and we get downside continuation. For levels underneath us, we have, looks like we can't even see them here on the daily. So let's go out to a weekly. There we go. A weekly gap is actually in place. So from about 11 down to 950 is your weekly gap, and that's going to act as your downside target. Not fantastic. Coming from about 14 into 10, 11 bucks. Quite a ways to fall, especially in terms of percentage points, right? You can also see that the trend here is obviously to the downside. You have highs, lower highs, lower highs, lower highs, lows, lower lows, lower lows, and we're continuing to put in those lower lows. So we can essentially afford any sort of dead cat bounce from the weekly time frame. Again, I know this is kind of outside the scope of actionable information for tomorrow, but just in terms of thinking about trend, even if this does bounce, as long as it doesn't come anywhere close to 28, is that roughly 26.50s? It's just a lower high, right? Something that does this, and we remain in a downtrend in NIO. The only thing that would save it, just to sort of illustrate that, would be a higher low that forms and then maybe a break for that next higher high, right? That's the only thing that can reverse the trend here on the weekly, and the daily chart certainly does not look good for reversals to the upside, right? Clearly breaking down. Again, just like GameStop, if we do get a little bit of a dead cat bounce, I wouldn't be surprised just because of the extension here to the downside, but it wouldn't really change the trend until we see something that does this and we get a higher low that forms above this prior point here, 1850. All right, so that's NIO in a nutshell. Let's continue along here. Next one up on the trending list is GTLB for Gitlab. What do we have going on in this one? This is an earnings candidate, actually, so we're going to go ahead and show the extended hours. What's going on? At first, a little bit of a pop here, quite promising, especially in the face of a pretty nasty broad market, right? But nonetheless, giving it back, right? So we're opening inside of today's range now. So gap rules are not really in play here. I would watch out for this as a pivot, right? You can clearly see if we take out our regular tool, there we go. We were consistently getting rejected there on an intraday basis. We break it on that earnings announcement. If we pull back and hold it, maybe, just maybe, it starts to respect that support trend line and it's a rotation back up towards the highs. That's probably an intraday scalp only. I wouldn't overstay your welcome on this. I mean, clearly, if we take a look at the daily time frame chart, this one's very methodically been moving to the downside with your lower lows as well. Again, remember what we just talked about in NIO. Anything that even bounces and is below 60 is just a lower high on the daily time frame. We would look for a reversal somewhere underneath that level to continue this downtrend, right? So nothing about this chart is promising here inside of Gitlab. Obviously, the only reason it's trending right now is because because of the pop on earnings, and even that isn't looking so promising, with a majority of it being given back into, when I'm recording this video, roughly 6 o'clock Eastern time, right? So nothing really to do here. If we open in range, again, keep an eye on this 33 pivot. If we crack down underneath it, we know the daily chart's bearish. Look for downside continuation. If we hold up above it, maybe it's a retracement back through this thin structure, the breakdown from this morning, and then your target would be the overnight high, right? That would be roughly be up here closer to 40. If we get something that does this, then a pullback for a higher low that's now outside of the day's range, maybe that's the setup to get into the overnight high. But again, I wouldn't push your luck in the face of such an aggressive daily downtrend. So that's Gitlab. Another earnings candidate out there is COUP. There we go. Coupa Software. Daily time frame chart, just like what we saw in Gitlab. Clear downtrend with many lower highs in place, lower lows as well. Nothing about this chart is screaming bullish, but if you want to look at it like a channel, right, you could do this. Let's take out our trend line. We'll come in for support, do something like that. And we'll just redraw that as a channel, draw on the top end. There you go. We're at the support portion. Now, I'm not saying it has to bounce. And obviously, if you've been looking at the right-hand side of the screen, boom, nasty move here on earnings, giving us what will very likely be some sort of gap down for tomorrow's session. And by the way, keep in mind, with these earnings candidates, a lot can happen between now and 9:30. So be sure to adjust your expectations accordingly. Let's say that COUP all of a sudden is going to be opening up here, no gap. Obviously, gap rules won't be in play, right? That kind of goes without saying. But as of right now, gap rules are in place. So what are the gap rules? Number one would state we're looking for a gap and trap, aka a filling of the move overhead. So if we open here, fail to put in any sort of move that takes out the overnight low, basically we find no more sellers down here. Look for the lack of sellers to open up an opportunity for the buyers. We trade long up through the open to start to fill the gap. Now, because this is such a large gap, I would keep your expectations in line with what the broad market is doing and not expect it to fill all in one day. A 50% gap fill would still be very impressive on a stock like this, especially noting the strength of the daily downtrend. So maybe if this unfolds in the first place, we get to, let's just call it 75. I really don't want to push my luck to the upside in a name like this, especially given that daily context. But if we start to get the gap and trap, that would kind of be the upside target where I would look and say, you know what, we've made it for a half gap. I'm going to take off again, just like what we talked about in Gamestop. 3/4 of the position, maybe monitor for the last quarter to get some sort of trend continuation, but trail your stop up higher, because clearly this thing could turn at any point in time and just continue to give us downtrend continuation from the daily time frame chart. So that's COUP in a nutshell. What else do we have on the trending list here today? We have CANO. What's going on with this one? Anything in the post market? Yep, looks like another earnings candidate here. Daily trend clearly down, a little bit of a gap here, probably some sort of catalyst. Nonetheless, we're starting to fill that gap on today's session. Just a lot of volatility on the earnings announcement here. So we of course want to know, let's go ahead and remove that. There we go, and we'll try again with our price level tool. There we go. Overnight high, overnight low are what we want to know. 650 and 510 respectively. Not currently slated to be opening on any gap. There's today's range, so I would be patient in here. And to be quite frank with you, it doesn't really look like a tradable setup here. Like, I would want to see something that does this, and then maybe that breaks these highs here for trend continuation on the daily. You have a really sloppy double bottom here, right? Something that does that. That's a crack of the neckline here after a higher low. Maybe that reverses the trend back up towards these highs around 950. Maybe. Again, keep in mind the daily downtrend here is aggressive as well. If this is going to be a reversal pattern, that's how I see it having to unfold. If it doesn't give us that, then again, there's no reason to really trade it in here, especially noting the chop from the overnight range so far. If we crack the lows, just look for the gap to fill back down towards this 450 area. Let's quickly take a look at the trade tab. It's hard to borrow. You're not going to short the shares, and the volume here on the options are absolutely pathetic. So I would just stay far away from this one if we get a crack of the overnight low 510. All right, so nothing to really do here instead of CANO, even though it is trending on social media right now. Let's continue along. MULN. What's going on with this one? Oops, can't type. MULN. There we are. What's going on here? Anything interesting? Anything good? Anything worth talking about? Let's see what's going on in the after hours session. Not a whole lot, so we're going to turn it off, eliminate those distractions. Looks like we got a gap and hold on the daily. So that's kind of interesting in the face of a falling broad market. I also like the fact that it's, sitting right here at this high. I would really wait to see if we can get some acceptance up and over the 2 even mark, and to remain interested in this thing over the course of time. Look at that. Thing of beauty as well. Support trend line is in place here inside of this, what is it? Mullen Automotive. Interesting. Never heard of it, obviously, but the pattern could technically be in play. For now, I would also want to know about this level. Oops, let's go ahead and grab that. And again, keep in mind, obviously aggressive daily downtrend. You're not betting the farm or taking out a second mortgage on your house to trade something like this. This is more of a speculation type move, right? Any consolidation that holds here and then reattempts that $2 mark and takes it out, that's bullish. I mean, look at this move to the left, very emotional to the downside. I I would start to look at the prior low here, 278, 275 as your target. I mean, a 75-cent move on a $2 stock, that's definitely worth paying attention to. So again, not saying take out a second mortgage to potentially trade this, but it's worth your time to trade for a percentage move that is so significant like that. So that's what we're seeing on the daily time frame. Obviously, if it cracks this low here and starts to break back down, it's all about the support trend line. And then from there, I would need to see extra confirmation. I suppose if you're an aggressive trader and you see a hammer down here that supports, then fine, long over the highs, look for 2, and then stop goes here. But even then, where's your risk reward, right? Depends on really how that unfolds. As long as your risk reward's in line, I wouldn't call you crazy for going long at the support trend line if there's some sort of bullish indication in the first place. From the 30-minute time frame, what else can we see here? What are we learning about the activity? Not a whole lot, to be quite frank with you. It was up, it was down, it was up into the afternoon, and it closed on a little bit of a down tick. What do we have in terms of our Fibonacci's, just to get a sense for where our levels and sections will be? As of right now, closed in the midpoint, so we call this the midpoint right here. Obviously, this is section number 1, 2, and 3. More bearish if you break down and get more acceptance in 3. More bullish if you break up and get acceptance in 1. So watch out for that. As of right now, kind of in the chop zone, the midpoint of today's range, that's where you stay away. So I would be patient on this one. It is a setup worth watching, but I would be patient, wait for this to resolve, either a break like this or a pull back into the support trend line, a hold, and then a move to here, and then monitor for continuation into that 280, 275-ish area. So this, definitely keep it on your watch list. MULN, decent little find here on the trending list. What else do we have? So CEI. That's, oops, not CEO, CEI. There we go. That's also on our list. Look at this horrific looking chart. Tons of levels all over the place. Let's start from scratch and, of course, give ourselves a blank slate to begin with. So here we go. Lows are obviously in at 46 cents. This strikes me as interesting right here because it was a gap fill area. We supported off of it today. We filled the overhead gap. This strikes me as interesting. 2-day lows, also a high from there at 1 even. What else? This, maybe. We'll see. So nothing really about this from the daily perspective, at least, is interesting other than the fact that we are trying to put in higher lows. We do have higher highs in the short-term perspective here. Is it tradable, though, is ultimately the question with all of these things. On CEI, I mean, I would prefer to look at something like MULN as opposed to this. The volatility here is far too aggressive to make it as tradable as something like what we just looked at. Anyways, in terms of the 30-minute and what's going on the intraday basis, again, I guess we just get more chop and balance as opposed to clear trending activity. I would watch for a break of this pivot, right? You can clearly see that if we can clear that, not to use the word clear too many times in a row, but higher lows, equal highs, its prior resistance, if it cracks, maybe it's the rotation into 1, a nice psychological number. So that's definitely a trade to watch out for. It's about a 10-cent move, so 10%. I would say that's worth watching for in something like CEI, a nice cheap penny stock like this. So yeah, there's a decent little range to trade for based on a 90-cent, 88-cent trigger breaking up and over today's highs, yesterday's resistance, Friday's resistance, right? That's definitely something to watch for. Not interested if we just remain in here, noting that if we get a breakdown, there's potential that we move to the support trend line, but if it doesn't hold, look left. Very emotional move on the way up here. So, potentially a move all the way into 58 cents, 60 cents. You don't want to be, involved in that on the long side, looking for longs here, and ultimately it breaks down that level. That would be no bueno, right? So CEI, definitely in play, but only if it takes out 90 cents, and we can look for that rotation into $1 even. Looking for the 10-cent rotation. Again, that is a 10% move, not to insult anyone's intelligence, right? So that's CEI, Camber Energy in a nutshell. It used to be a really popular one, and obviously it's starting to come back to life. What else do we have? Anything else on the list? Sofi appears to be trending. Sofi. So what do we have going on here? And then we'll wrap it up at this one. So let's clear the drawing set and start from scratch with a brand new daily roadmap. What do we have in place? Big resistance back there, which is clearly no longer really in play, but we just want to get a sense of bearing on the daily time frame. That pivot didn't really hold up for anything. 2-day lows flushed here under 924. And what do we have for supports underneath us? If I remember correctly, we are basically looking at, and I know it's not been around for 10 years, new all-time lows here inside of Sofi. So nothing really to be done with this stock in terms of finding support underneath us. I would really wait for a daily pattern, a daily double bottom, a daily inverted head and shoulders, a daily ascending triangle that gets put in, something to use as a risk-reward type entry before fishing for longs here inside of Sofi. There's just no telling how low it could potentially go. And what I mean by that is, again, this could clearly just continue to dribble lower. If we put in something that does this, there's your double bottom, right? Your risk is here, break of the neckline, probably start to target $9, and then maybe up here, right, over the course of the long term. if we don't get a double bottom, again, where are you going to put your stop loss? Doesn't really seem like a logical setup unless we start to do something like this and we start forming a higher low and we can take out the prior high, right? That's trend reversal from the daily perspective, and it's not really based on a pattern, right? So that's the only way that we can start getting long from this daily perspective. What else are we seeing rather from the 30-minute intraday time frame? Anything about this chart suggesting a reversal? Answer to that question is absolutely not. You can see there's your breakdown point. So let's go ahead and put that in with a horizontal level, 8 even, a little bit of a dead cat bounce into the afternoon, but never even made it there, and even put in a hammer candle indicating that there was an attempt at lower. It just wasn't sustained into the actual bell. So let's quickly take out the fibs, get one last look at it from this perspective, and look at that thing of beauty. 38.2 is coinciding perfectly with that $8 level. So anything that happens here is bear flag consolidation, looking for breakdowns to take us into these uncharted territories to the downside inside of Sofi. So that's going to wrap up today's video of trending tickers. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.